Hi guys, it's your guy here, the unknown trader, and today I want to show you how to trade explosive news events, okay? Because I hear and see many people waiting for events like non-form, but most people don't really trade them the right way, okay? And I'm not saying my way is the right way. If it's working for you, good. When I'm saying they don't do it the right way, I'm referring to those who are blowing accounts day in, day out, okay? They're not even seeing any results despite following advices from other traders who have been in the field for so long. Okay, so what I'm gonna show you, first of all, I want to be on the safe side. I'm not just gonna gamble, because trading is not gambling, it's a business. So there are certain principles I follow, so I just want to share that with you. Maybe it will help you. Okay, so first of all, there's this website called Forex Factory, and you just come and create an account, and you come and make sure by clicking here and setting up your own time zone. Make sure it matches your time zone. Always make sure of this, then save. It's highly important. Okay, after that, come to calendar. Okay, and then when you are here, what I did, I went to filter, and I as here is filter, and I chose only the red news. Let me show you. You see, I chose only red news because these are the news that move the market. This one, they are not that strong. Even yellow are not that strong, and this is usually holidays. I want to know which currency is not gonna move during its session, because for instance, you might find that during the London session, London banks are closed, and this only tells you that banks are closed, it's a holiday. You don't want to be trading like the London currency during London session when the London banks are closed. It's not gonna move, it's not gonna do anything. Okay, so you don't want to do that. So I only have this red news, and I only have this. So I filtered out this one, and I filtered out this one, and here are the currencies I have chose. Okay, just to make sure my chart is not clustered. Okay, and yes, this is what I have right now. So I'll close this. This is why you see red, and on your own forex factory you were gonna be surprised see many colors, yellow and orange and all sort of stuff. Okay, so you just filter. For me, I'm interested in the red news, and what you're gonna do is you're gonna come here, okay, on this icon, like file icon. Okay, and then you read only this. I'm not saying go and dive deeper into fundamentals. If you are an intraday trader, I don't really follow much of fundamentals, but I want to know uh, about the news that are gonna be released on that day. As you can see, we have CPI, core CPI, and what I want to see here is actual greater than forecast is good for currency. It means for CPI, if this is greater than the forecast, then it's gonna be positive on the US. Then prices are gonna increase, okay, on the dollar. Okay, but what I personally prefer is I want to see this number being greater than this one as well, because sometimes you find that, okay, this actual value is greater than the forecast, but it's less than the last one, the previous one, and that to me might just end up being a choppy market. Okay, so I want to see this being greater than this one, and as you can see, come click here again, it tells you the same thing. Actual greater than forecast is good for currency. So now you just look at this and compare the numbers to this one. Now you know that, okay, well, if this one is greater, then this is gonna be good for the currency. And I'm gonna show you something. Okay, you come to this one. Okay, you do the same thing. Actual greater than forecast is good for the currency. Now we know that, okay, we have like this type of news being released on the same time, and if this one is greater or greater and greater than this one, then it's gonna be positive on the dollar. Okay, the prices of the dollar are going to increase. Okay, so let's see what we should do. If you don't understand this kind of news, CPI, you just come to this website called Trading Economics, and you can just say US CPI. Okay, CPI, and then you can just search for CPI. Okay, you'll find United States Consumer Index Price, and you can see how it has been going. Okay, you can see how it has been going. Okay, so you'll be able to get all the data you need on this website, and the good part is it's free. Okay, so let's go back. Now I'm gonna show you. You see all this news are less. This one is less than this one, this one is less than this one, and this one is less than this one. This means that everything here is against the US dollar. Okay, it's against the US dollar. So let's go to our charts and see. As you can see, the date is the 12th of July. It was on Wednesday. I'm gonna come here. It was this day, Wednesday, 12th of July. So I'm on a 1 hour time frame, and I'm in gold. And if you look at gold, gold, it's XAUUSD, so it's gold versus the dollar. And now we have seen that the news were negative. What does that mean? This means that USD is gonna go down and gold is gonna go up. And on the charts we know that if it's gold versus USD, then gold has to go up. That means automatically USD is going down. Okay, this is highly important to know. As you can see, again, I will repeat the very same thing I said. Okay, as you can see, the news were negative, all three of them, and that simply means that gold will go up and automatically USD will go down. Why? Because gold is paired here with US dollar. So when was the news released? 2:30. That is 30 minutes into the that is 30 minutes after the session opens. Okay, I'll show you what I mean. I don't want to confuse you. Okay, so what do we have? First of all, for those who know my signals, I have videos whereby I show you my signal days. This market went down and gave us a first green candle on a daily time frame. This is my signal. The following day it gave an inside day. It's still a signal day. I'm expecting them to go up. Go and look at my previous video. Okay, I'll put it in the link in the description. That's where you'll get to understand my setup and why I was actually expecting the markets to go up. Okay, so first of all, you must have a setup. Okay, and that setup should give you a clue on which directions the market will go, and you are just waiting for the news. Okay, so now what I'm gonna do, I'm gonna go to a lower time frame. So I'm just gonna pull out Asia right here now, Asia 15 minutes, because I was on a 1 hour time frame. And let's see what happened on this time frame. Where is gold? Okay, I don't have gold in this pair. So what I'm gonna do, I'm gonna go to London. Gold should be there, but okay, it's fine, that's not a problem. Now we are on a 15-minute candle chart, and this is the day of the news. Okay, as I told you, I'm waiting for, if the markets have been going down for a day or two, this is a dump. What I'm waiting for is a day that closes green, as a green candle. In other words, as you can see, this market was opening high and closing low. That on a 1 day time frame will give you a red candle. Again here, this one will also give you a red candle. Why? Because it opened high and closed low. However, this one here on Friday, this one opened low and closed high. It's a green candle on a daily time frame. So you must understand other time frames on the current time frame you are using, because that will help you a lot. You don't only trade your time frame. Okay, it's like if you're driving a car, you have to be driving your car, the car behind you, and the car in front of you. Okay, you can't just be focusing on your own car alone. So the same applies here. You don't just look at your current time frame. You must incorporate all other time frames into your current time frame. Just develop that skill. It's important and it will help you. So this was my signal day. Okay, this was my signal day. What signal day? If you look at my previous videos, you will understand what I mean by this, because I have documented everything about the signal day. Okay, so now I'm expecting the market to go up, because now I'm expecting an upper trend for at least 3 days, okay. So this is my first day, okay, and the following day gives me an inside day, and this is highly important. It's an inside day. Inside day denotes two things. It's either the market is gonna reverse or the market is gonna continue. Just like when you are using, maybe here it's a 15-minute time frame, okay. The markets are fractal, guys. What happens on a bigger time frame will also happen on a lower time frame. And when I say an inside day, on a 1 day time frame, on a daily time frame, this candle here, this day here, was gonna form this kind of a candle. You see this candle here? It's an inside candle. So this day formed something like this. So it shows a reversal or a continuation. I can show you in many instances where it became a continuation. I'll show you in a minute, okay. I'll show you where it became a continuation candle. Inside bars, inside days in most cases represent, you see here, it went back up, it's a reversal. So inside bars or inside days, whatever it is, because if we are on a daily time frame, we are gonna be seeing all these days as a single line, okay, or a single bar, to make it precise, okay. So you must understand that an inside day either represent that the market is gonna shift back or the market is gonna continue. But in my case, it has given me a signal and I'm anticipating it to go up. So this is my day one, and when I continue, I see an inside day. Well, fine, I'll continue my day to the following day. So this one becomes my day two, okay, day two, okay, and this one becomes my day three, because I'm expecting at least a day. I'm expecting them to go in a unidirectional move for at least 3 days. Why? Because once they get you trapped, they're gonna move away from you to dig deeper into your account, okay. So that's what happens, and that's what I'm taking into consideration, okay. So let's see. Signal day, which for me is day one, okay. And I don't want to confuse you with all my setups or whatsoever, okay. So I have another strategy or another setup that I haven't talked about in any of my videos, but I will explain them to you, whereby we use Monday and Tuesday to give us our consolidations. And then, as you can see, they broke up, they pulled back one, two, 3 and reversed. You know, if you follow me, everything is about 3. That's why I'm looking for at least 3 days, because everything about the market is incorporated in the number 3, okay. This is a psychological number which is important not only in the trading industry but also in the world, with God, with everybody. 3 days are 3 days, or the number 3 is highly important, okay. So I'm not gonna talk about that right now, okay. However, on this day, yes, I was anticipating a continuation, of which, yes, they did come and break the high, okay. And then this is the time when we had the news, and as I told you, when there are red news, I am not really interested in being in the market early or in whatever session. I only in most cases want to come during the US and take an opportunity if presented, and kindly note, if presented in the US session, okay. So guys, this is it. I believe this is so simple, okay. Might be hard for you at first. Just repeat the video and you'll get it, okay. So first of all, we have a signal day, we have a day 2, we have a day 3, and yes, we were anticipating this market to be bullish, okay. We can also draw a trend line that is in agreement with our move. You see, this market is just bullish, guys. It's bullish. We can just extend this line to maybe yeah, it's fine, I can start it here, okay. And this is bullish. I don't use trend lines, but they are important just to show you the side in which you are going. So now we're gonna switch to a lower time frame. This is gonna get too fascinating, okay. Seems like I can't switch to a lower time frame right now, but okay, let me just let me see if I have. Okay, I don't have a template right here, but let me just let me show you. Okay, okay. If we go to 15 minutes, let's go to 5 minutes and see. But this one, okay, it's not gonna change anyway, so it's fine. What I'm gonna do now is I'm gonna just open a gold. I'm just gonna open gold, okay? Let's see, where is gold? This is gold. I'm gonna open a new chart, you see, and then I'm gonna go to properties, and then here I'm gonna choose black and white, and I'm just gonna come here and remove the grid. I'm not interested in grid. I'm not interested in this. I'm only interested in this too, and yeah, I should be good to go. And right now here I'm just gonna choose my candlesticks, and I'm gonna choose a 5-minute chart to begin with. Okay, I won't have my sessions right here, but it's okay because I don't care about indicators. The most important thing is prices. Okay, so now this is the day on which the news took place. Let's go back. Yes, we can zoom a little bit. Okay, we can zoom a little bit. Where's the day? Here is the day. Okay, this is the day the news exploded. So let me just put my consolidations in place. First of all, we have okay, let me try to put this indicator, because I have some indicator. Let me put the previous day's high and low. Okay, this is not a fancy indicator, guys. It's just previous day high and low, and that's it. You can also just draw a line. Okay, I just want to see where yesterday opened and where it closed. You see, this is just a previous day. Like for instance, this one reached this height, and this one reached this low. This one reached this height, and this one reached this low, this height, and then this low. As you can see, it's only telling me about the highs and the lows. Okay, so what I want to see is I have a consolidation before my session start. I have consolidation. That's why I told you that usually when there is explosive news, what they will do is they will just consolidate. Okay, they will just consolidate. So okay, this is my consolidation, and I will just take this one as consolidation as well. Why? Because this was the high of Asia and the low of made in London, and yeah, this is pretty much it. Okay, I just want this thing to be perfect. No, it's fine. So let's look at what happened, really transpired during this news. Okay, I just want to, yeah, this is what happened. I'm on a 5-minute chart, but when the news begin, please pay attention to this strategy. Okay, I'm gonna bring in another indicator called exponential moving average. This is gonna be a moving average of 20. Okay, it's only 20. Okay, and my rule says during news, what I do is I trade bounces. When the market comes and bounces on this EMA, that's when I am gonna open a position. On the 1-minute chart, I repeat, you go to a 1-minute chart, you put a moving average of 20 okay, it's fine. You put a moving average of 20. Where is that? What? Okay, it was the 12, right? Yes. Okay, 12. Yeah, this is the day of the news. Okay, guys, this is important. Please pay close attention. Okay, pay close attention. Let me go to the 12. Okay, or else I could just type it in. Okay, you don't have to scroll like I am doing. Okay, what you can do to go to a specific date is like, okay, you just hit enter and you type in the year and you type in the month. You type in the year dot month, and then you type in the day. I need the 12. Okay, and then automatically I will go to the 12. Okay, so where is my news? Okay, where is my news? Okay, this is where it was consolidating. Great. So markets, what we wait for when trading, we wait for breakouts. The market consolidates, it breakouts. When it breakouts, immediately when it breakouts, when it breaks out, this is breaking structure now, okay? This is breaking structure. What happens at this point? We have breakout traders. Those are the people who will jump immediately in when the market crosses this consolidation. As you can see, guys, this is a consolidation that took place from Asia. Okay, it started during the session of Asia. Okay, this is Asia's high, this is London's low, so this is our consolidation. Okay, so when the market breaks out, we're gonna have breakout traders jumping into the market, okay, and going up. Okay, and other people will tell you to open two brokers. On one broker, you buy, you place a pending buy order. On another one, you place a pending sell order, and they will tell you that, so for instance, if each account has $2,000, then one is gonna get wiped out and the other one is gonna profit. Okay, but in this case, if your pending order was here, this sell one was not gonna get activated, and yes, for this one you would have won big time. Okay, but you will be profitable here and there, and if it works for you, I'm not gonna write off any strategy, guys, because that's not my job. If it's working for you, then it's good. But based on my experience, what I've seen is that market movers, institutions are aware of that, so they know there are many pending order below and they know there are many pending orders above. So what they usually do is they will go down and pin down, then they will go up. Okay, or they can just go pin, come into the middle and start consolidating, of which I believe happened on gold on Thursday, but I'll just show you. Okay, so what I want to do is I want to wait for the news to trade first. I want to wait for them. And now, since the news was against the dollar, as we saw, it was negative, it was lower than the previous and lower than the forecast. So that means that gold is gonna increase and the dollar is gonna fall. Okay, so now we know that this news, this move is under the news catalyst. In other words, this market is under big influence of the news, so it is gonna move and it is gonna go up anyway. Okay, but we don't do anything. Okay, we just come and relax on the 1 minute time frame, and we take into account this happened at 2:30. You must pay attention to what will happen at 3 o'clock. Pay attention to what will happen at 3:30. Pay attention to what will happen at 4 o'clock. And pay attention to what will happen at 5 o'clock. Look at the clock. Look at those important hours, those important times. Okay? So, what I mean is, this happened at 2:30. It went up 150 pips. It went up 155 pips. But I did nothing. Okay? And the most important thing is, we're gonna wait for the market to break out and relax, because we know that there are those who are gonna get in because of the breakout. We just relax, and we know that market movers are aware of that. We know that market movers are greedy. We know that they'll always come back, shake people out through fear, or else cut them out completely before going into the intended direction. So they exploded up. Those who place pending buys, pending sells, okay, yes, they went into profit. But most of them, as the market pulls back, look at these candles, they are too big. They pull back almost 90 pips. Okay, so they went up 150 and they pulled back 90 pips. Obviously, at this point, if you entered early, you are already out of the market. You won't wait or go through the pain of seeing the negatives coming or your profit declining. Okay, so what we start doing is we count 3 times. Why? Because I want to see the market breaking out and pulling back, either back to a point whereby they enter Sometimes they can pull back and come and close you, but most of the time they won't. They'll just come back and pull back just enough to scare everyone else who was in profit out of the market, okay? And then they will go into their intended direction. Remember, they are greedy. They don't want to carry anyone on their shoulders. They want to go alone, because the main objective of the markets is to take money from many and give it to the few world leaders, okay? We don't know who are the guys who are dominating this market. We don't know the guys who are in control of this market, but one thing we can say for sure, it is those guys who own countries, okay? Those guys who are powerful, those guys who mess up countries and all sort of stuff, okay? They have power, they have capital, so they do anything they want. So they are not gonna go with you, because powerful people or wealthy people shine when others are struggling, okay? So they are not gonna go with you. That's one thing for sure we know. So one thing I want to see is, I want to see a market breaking out, and I want to see it coming down in 3 pushes. It can be in the form of 3 candles, 1, 2, 3. It can be in the form of 1 candle, 2 candle, and then an inside candle, and then another bearish candle, which makes it 3. It can come maybe in the form of 30 pips down. That is 10 pips, 10 pips, 10 pips, 10 times 3, it makes it 30 pips. That's 3 levels of 10, okay? It can also come back 25 pips. It can come back 50 pips. It can come back 75 pips. But what we want to see is, we want to see them pulling back to the breakout, okay? That's their behavior. You can't take that away from them, okay? Because we know the market doesn't go straight, it goes like this. And what are they doing? Why do they pull back? They are locking profit, okay? Even you must learn how to lock profit. They are locking profit, taking most of the profits out of the market and into their accounts. That's what they are doing when they pull back. That's why every time you see the market going like this, if it's going down, it go like this. When it pulled back, they are locking profit and shaking everybody else, because we know that when the market moves like this, the emotional people who are gonna jump into the market. Many people are moved by emotion and not by a trading plan, and that's a huge problem, okay? But less on that, okay? But the people are gonna jump in all over here, and then when they pull back, they take all that money from you, okay? They are greedy, guys, remember that. So now I'm gonna zoom a little bit. Let me go back to the date, okay? Yes, it was the 12th, not the 11th. Okay, it's here. This is the day, okay? This is the day. Now the news have played out. We know that this market is under the influence of catalyst, and we know that the dollar is falling, okay? So what we do, we wait for them to show us that they are moving away from the zone. This is important, guys. This is important. We wait. You don't just come and trade on this pin, of which I did. I took this pin, okay? Because I opened my position somewhere here, because I understood that, okay, the job is done, and I understood the timing. I'll show you why I opened it here. Look at the time. Look at the time. This broker is, if you look here, you will see that it's just that it's closed, okay? But you can see this is 9 o'clock. The market closes on Friday at 12 o'clock. This is 9 o'clock. This tells you that this broker is behind on 2 hours, okay? And you can't change the server time. You just have to make sure that you understand the timings, interpret them using your own time zone, okay? Because this is where most traders get confused, and this is how they take your money. You must understand that the times you see here down here on the charts, because when I put this, you see I see some time here. These times are the server times, they are not your time, okay? So make sure, if you are coming in the London session and it's 8 o'clock, make sure even on your time it's 8 o'clock. Make sure you are using the right times, okay? Because that's part of their tricks that they utilize, okay? So I'm back on the 14th. Every time let me enter 2023-07 dot it was the 12th, okay? Yes, I'm back on these days. So okay, so we want to make sure that they are shifting the zones away. Now I understood the timing, knowing that this broker is behind in 2 hours. So look at the time down here. Immediately on this pin, it is saying it's 1 minute past 1. It's 13:01. So we add 2 hours. Okay, just as I showed you that the broker is behind in 2 hours. So we're gonna add this 2 hours to match our time zone. So it's gonna be 2 3. This pin happened at 1 minute past 3. I told you pay attention to these times. Okay, 3 o'clock, it's when the US session opens officially, because at 2 o'clock it's an hour before the official open of the US session, and that is when usually they send you into the wrong direction, or they trap, or they do whatsoever. That's why we use that time. That's why on my chart you will see 2 o'clock to 5 o'clock. Okay, because this hour is important. The first, and when the session opens at 3 is important, and when up until it goes to 5 o'clock. Okay, those times are highly crucial. So it's only 3 hours that I use per day. I want to be in the market for an hour or two. If I don't find anything, I want to get out. Okay, so guys, paying attention to the time, I knew they were gonna reverse. Okay, however, if you are gonna do the right thing, this is your entry. Why? I'll explain everything to you. Because they came back in 3 pushes, you tick. Actually, what I want to do most of the time, just to help you, I'll put a box like here, a black box. Okay, this black box is gonna help me because I want to see every step of the way. And then I'm gonna bring in my text, and I'm gonna type criteria. This is what I do every day. If you really want to treat this as a business, you must work. Okay, this is criteria. I want to see my criteria that are met, because I have my own specific rules that I want to see. I want to see them forming maybe a pattern, of which we had a pattern low, a W. Okay, so one thing I will do is I'm gonna come and say pattern, yes, but because it's news and already the move has taken off, you can just ignore this pattern for now. Okay, but it's important maybe during the days when you won't see news. Now we know that the market is under the influence of news. You can just omit that for news. Okay, because now we know that the market is moving. Okay, they don't have to trap and do all sort of stuff. They've trapped during the consolidation, and now they are ready to move. So one thing I'm gonna write is I want to see if they've broken out. So I want to see a breakout. Okay, this is my first criteria, and then I'm just gonna lower the size a little bit. This is my first criteria, and I want to see it met. Every time a criteria gets met, I write it out. So they broke out, yes. Did they pull back in 3 pushes, in any form of 3? Did they do that? 1 pull back, 2 pull back, 3 pull back. This is good. They did pull back into the breakout in 3 pushes. Okay, they pull back to low, to breakout, not low, because sometimes it might be going to BO in 3 pushes. Okay, I want to see this being met. Okay, it's fine. The box is a bit small, but I understand or believe you see what I'm doing. Okay, and then now what I want to see is timing. Is the timing correct? I told you, yes, it's correct. Exactly at 3 o'clock. And now I want to see them market structure. I want to see them reversing and breaking structure to the other side. So I'm gonna say change in direction. Okay, change in direction. Okay, I want to see them changing directions. What do I mean? Market structure. When it's going down, it's making a higher lows and higher highs. This is a high, this is a low. pulls back, it makes a low which is lower than this one. We call this a lower low, and this becomes the high the moment it breaks this. Okay, and then now we okay and then now we're gonna say this is a lower low, this is a higher high. Yes, now it's making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. However, notice what starts happening here. What starts happening here? What starts happening here? This is the low. We broke structure. Okay, we broke structure, and now we have a lower high. So this should at least tell you that now they are putting a higher low. They are putting higher lows now. They have changing direction. And I told you for the pattern. But however, during the news, you can just say, oh no. If you understand everything, you can just cut out the pattern. But I just want to show you the pattern here. We have a shoulder. Okay, we have a shoulder. We have another shoulder. And then we have a head. What pattern is this? This is a head and shoulder. What is a pattern? A pattern is either it's a reversal, it's a sign that they are reversing and they have trapped traders. Okay, so shoulder, head and shoulder, M, W's, triple tops, triple bottoms, those triangles, those are patterns. So yes, we do have a pattern. Okay, but I told you, because now we are under the influence of news, you can just avoid that for a moment. But here I have my pattern. Okay, I have my pattern. I have my pattern. Okay, no, okay, it's fine. But I just want uniformity. I want these things to be uniform. Okay, but I have my pattern. This is my pattern. So there's one last thing I want to see. Okay, I want to see an engulf away from the pattern. I want to see an engulf away from the pattern, because when they are gonna move, please write this down. Usually when they shift zones, they shift with an engulfing candle. So I want to see an engulf. I want to see an engulf that shows me that, oh, now they are moving from all this nonsense they've been doing. Okay, here is an engulf. So I'm gonna write it down again. Let me write it down. Engulf. But things will be happening so fast, so you must just memorize this and be good in seeing this. Okay, this is the engulf. Okay, and then one last thing I want to see is trapped volume. I want to see trapped volume. Okay, trapped volume. I want to see traders trapped going the wrong way, because as you can see, nah, it's fine. I don't know, I think let me see. Okay, I want to see trap volume. If you come with a line right now and you do this, you can boldly say that everybody going down is trapped. The markets will do three things. They will show you something, trap you, and reverse. That is the role of the market. They show you that now we are going down, we are reversing. Those who are in profit maybe from here might just use their emotions, and even those who are out of the market, they might use the emotions just to say, oh, this was a stop hunt and now the market is going down, and they show you go down, they come back, go down. Remember, one important thing that I'll always say is these pins. When you see a pin, most pins are trap. Okay, if they are gonna go up, they're just gonna give you a pin like this, whereas they know that they are still going up. They'll just show you a pin and then engulf just to get you to take the opposite direction. Okay, so most pins will be traps. However, if you understand what's happening, then you can use the pins to your advantage, because pins don't just become pins. Okay, this means for the whole minute they went down. This candle was fast and strong, just like this one, going down. In other words, there were many people jumping down, down, down. They came again, broke the structure. What happened? Okay, it has reconnected to the internet. 2023. I don't know why. Okay, 07 and then 12. It's fine. We'll just head back to what we were saying, guys. This is important. Okay. So I don't know why they keep on doing this, but it's okay. We can just go back. Sorry for the time. Okay. The market. Oh, let's close this one and let's do this. Okay. So that is the reason. So now it won't bother us again. It won't change directions again. Okay. So as I told you, this one didn't just become a pin. It was a candle going down fast. Hence, people were jumping in. Remember FOMO, fear of missing out. I'm missing out. I'm missing out. No, guys, relax. Okay, relax and pay attention to everything that's happening. It's 3 o'clock. They gave us a pin. Obviously, they might be changing direction. They come and lock the low, and then they changed the direction with this engulfment, guys. By now, you are sure that these guys are no longer coming down. You can put your stops down here. However, we want to keep our stops being 20 pip. Okay, this is 50. We can't do that. So what I did, I entered here and placed my stops here. And the moment they came and locked here, I just moved my stops back. And you start with a very small position. Okay, start with this very small position to see if your thesis is being rejected or it's being approved. And the moment you see that your thesis is being approved, then you can increase your position. Say for instance, if you entered here like me with a very very small position, lot size, a very small lot size, you could have came back and re-entered here with a bigger position, because now you are certain that they are leaving, and we know that this market is under the direction or the influence of news catalyst. So what is a catalyst? It's a chemical reaction that speeds up. It actually speeds up a chemical reaction. Okay, so we know that this move is gonna go up because it's under huge influence. Okay, so by here, this is your entry. I'm trying, guys, to show you even possible entries. Don't guess directions. You know why I lost a lot? It was because let me try to draw this trend line right here. You see, they were going down. You don't want to counter trend anything here. Now I entered only because I understood what was going and I understood the timing, but it was a bit risky. You have to first make sure they break and they trade away from this line. Then you are guaranteed that, yeah, now they are ready to move. Okay, don't try to save every pp by entering early, catching the low. You're gonna lose most of the time because they could have just continued going down and down and down. But when you take this, you are now sure that they have shifted. They have trapped traders going down, and they have shifted that direction, and they have met all your criteria. So at this point, you are quite certain that your trade is gonna go. And one last thing, how do you take profits? I just run my Fibonacci. This Fibonacci has been set to levels. It's nothing fancy. You see, it's not like the ones most people use, or it will be quite different from the one you are using, because this is just taking into account expansions. It's this size times 1. When it says 2, it means it has just double this size. Okay, so if this is my first take profit, it's only this size. But usually what I do, I always say talk about 3. So everything about the market is in 3. So what I'll usually do is I'm only gonna take it up to, let me show you. I shall delete it quick. I don't know if you have seen. I'm just gonna take it to the 3rd expansion. What this gives is just this level, this size times 2, and then when you say 1, 2, 3, we have 3 levels. Okay, so this is what I did, and this is where I put my take profit, and I got kicked out of the trade. So now when you have your stop loss, and when you have really done your work, and maybe you have entered here, guys, you are safe. You are safe. You are safe to go. You are very safe to go. You can go out, you can have fun and do all sort of stuff, and you come back and you will find that, okay, it has closed you in a profit. Okay, it has hit your target, you're out of the market. And yeah, it was a good Friday. Actually, it was it a Friday? It was a good Wednesday actually. So it was a good day. And even if this was the only trade you took, it was about where is it? It was about 100 pips. So imagine 100 pips in an hour. That was amazing, guys. It was amazing. So you don't need fancy indicators. You need to understand price action. You need to understand the bars. You need to understand prices, because that's what you're gonna be taking. All indicators, to me, I find them lagging. By the time they show you something, it's too late. That's why I don't use fancy indicators. I only use whole numbers. I use session times, and whole numbers are showing me the price when it's like exactly 2 rand, when it's exactly 1 rand, when it's exactly 150, because those are the levels at which most banks are likely to react on. Okay, so yeah, I believe this video helped you. Sorry it's a bit too long, but when I explain something, I want to explain it thoroughly in detail. Now you have your entry, you have a stop loss, and always enter after the engulf. Wait for them to show you that they have moved from all the nonsense that has been taking place, all the trapping, all the sort of stuff. The moment they show you that they've moved, guys, they have everything they needed. All the work is done. The only thing is to walk away and go deeper into those who bought the trap. Okay, who actually sold the trap, who were convinced that they were going the opposite direction. So all I can say is relax and be patient. Okay, patience will pay you a lot in this industry. Wait, be patient. Don't jump in for every move. I did that, I lost. Be extra patient. Take timing into account. Time plays a significant role. Okay, I want to see what happens at if it's London session, because I don't care about Asia. I'm not on the screen. It's time to sleep. It's 2 a.m. So I'm not gonna be convinced. If they move, it's fine. I'm not gonna miss anything. Yes, there are currencies, as you can see here. I have like Asian 1 hour. These are all the currencies grouped here which moved during the Asian session. This is London. London is similar to US, and now I'm showing you US, but I'm using the London because it's almost the same currencies. I have my major pairs, so everything is paired out. I don't come and just panic and do all sort of stuff. So just a recap, we have a signal day that tells us or gives us a clue about the direction or where the market is gonna go, and then we wait for the news to trade, wait for them to break out. If the news were strong, we knew that all 3 news were against the dollar, so we are certain that those results are strong and they're gonna move the market strong. So we wait for them to trade and break out, and we know they are gonna come back in a form of 3 pushes. Sometimes they'll come and enter inside, sometimes they'll just 1 2 3 and reverse. They don't always have to enter, they don't always have to hit the consolidation line or whatsoever. Some people call it support and resistance. They don't always have to do that. They can just come down into candles, but pay attention to time. What happens at if it's London session, look at 9 o'clock to 9:30. Usually that's the time when it's gonna be explosive. Sometimes it's not just gonna move immediately to the other direction or to your direction. Sometimes it's just gonna shift the zones. Like here, 3 o'clock they gave me a pin engulf, but they still consolidated, went up, consolidated, brought the consolidation down. So they were still busy trapping, but they started shifting the zone immediately at 3 o'clock. Okay, and let's see at what time. At this is so great, guys. Immediately at 14 past, they shifted the zone. So the next 15-minute candle, the opening of the 15-minute candle, for those who are trading the 15-minute time frame, that candle was already going up. It was going high. So because I'm on a 1 minute, for those trading the 15-minute candle, this one candle, the 15-minute, shifted the zone. So guys, you must know what's happening on the 15-minute, the 1 hour, the 4 hour. Even though you are using the 1 minute chart, just understand price action, understand charts, know exactly what's happening, and that is what will save you. So I will just want to say thank you for staying this long. I wish you can grasp everything I'm telling you, and as I'm trying to go deeper and deeper and deeper and explain things in a way that I think might help you. So guys, go and read a book by Skabarkar. It's technical analysis and stock market profits. Get that book. You can buy it on Amazon, it's cheap. You can buy second-hand book from Take a Lot. It's very, very cheap. That book is amazing, guys. That book is amazing. It will teach you about price action. We have traders like Peter Branded. That's the book he recommends. That's the book that changed his life. He's all now. That book is it was written decades ago, but the markets are still the same despite many years after that book has written. Everything is still almost the same. So the markets are not gonna change anytime now. The markets are gonna be the same. Get the skill now, and you're gonna enjoy for the rest of your life, because markets are going nowhere. Setups are not gonna change, because most people are not getting this, and they won't get it anyway. Even those who get it, they're still going to use a very small lot size, so it won't make a difference to the big players anyway. So guys, these markets are going nowhere. They are not changing anytime soon. The setup, once you master them, it's a skill nobody's going to take. You can do this from anywhere you want, and most importantly, it's not going to change. Now 20 years to come, it's not going to change. Yes, the markets do evolve, but the setups never change. So guys, I wish you all the best.